So this is going to be a little more advanced, but this is what use to trade. This is how I trade, and I figure you might as well just learn some of the hardest shit first, and then like work your way down, rather than just kind of learn the basics and go from there. Because I'll talk about shit and you'll just be confused. So this is what I do. I use an indicator, which if you're on Webull, you can see right up here, indicators. I use the EMA indicator, and this is the exponential moving average. I could kind of pretend to explain to you that I know exactly what that means. I don't exactly. I just know that it's an average of where price is usually at, given that the time period that is under. Again, I know it's confusing. I'm not making sense. I don't know the exact definition, and I'm not going to pretend like I do. But this is the indicator that I use. I would go to indicators, look for EMA, and then from there, on my Webull chart, I would go over to EMA over here, and I would press this little, it looks like a nut icon, a settings icon right here. I would hit this, and what I would do, just so it's not too complicated, I would just use two of them. I would use 9 right here on this first length. I would go 9, and on the second length, I would go 21. 9 and 21. From there, I would go to style right here, and I would pick, you can pick whatever color you want, whatever you're feeling, it doesn't matter. Mine are purple and this little orange, and I would check them. I would make sure both check marks are in each here for 9 and 21. I would go to done, and from there, they would be on my chart. And what you'll notice is they're different on each time frame. So this is the 5-minute chart, and you can see the 9 EMA is this purple line, and the 21 EMA is this orange line. If I go to the 10-minute or the 15-minute, it's always changing. It's always in a different spot. So it's all about messing with it and finding, something that works for you. Again, I will use, multiple time frames as confirmation, but primarily I will be looking at the 5-minute chart. My whole main strategy, my whole go-to thing that I do is usually just this 5-minute 9 and 21 EMA. It's something that I've kind of back tested. It's something that I've used, and something that I feel comfortable trading. And again, nothing is 100% right. This will not always work. There's a lot of times where you could get faked out. So it's all about using this in addition to support and resistance levels or chart patterns or anything like that. You want to try to, the more indicators, the better. You don't want to just base your trade off of just one thesis. The more, the better. So, for example, this is an actual trade that I took today. I had a decent day today, and this is one of the trades that I took. And again, I could have made a lot more money. I left a lot of money on the table, but my strength is in scalping right now. I'm comfortable getting in and out within anywhere between 5 to 30 minutes, and I'm out. I don't trust these markets. At any moment, I feel like you could get reversed, and your position could go from green to red if you're not careful. So I've been practicing taking profits when I see them, hitting my daily goal, and trying to be done for the day. Because the last thing you want is for your green trades to go red. You don't want to get cocky. You don't want to get greedy because you will get humbled very fast. So, for example, this is one of the trades that I took today on SPY, SPY. I went on the 5-minute chart as such, and I was actually a little lucky, not lucky, but fortunate, I would say, that I was on lunch at this time. I work a normal like 9 to 5 job. So during this time, I was on my lunch break, and I had time to where I could really look at the charts and try to plan a trade out if a pattern presented itself to me. So in this case, it did. Like I said, I usually trade off this 5-minute 9/21 EMA chart. That's usually what I look for. So in this case, I can see that SPY started off at 9:30 here when the market opened. It was above this trend, and as the market opened, all the way up till 11 o'clock here, it was a trend day. It was using this 9 EMA as support, the 21 as support. As you can see, the price goes down below here and then wicks back up, and you can just see it's just riding this 9 EMA all the way up. Like this from open all the way up to here is a very, very good position if you were long. If you were in calls here, if you bought the market here, this was a good trade for you long, and you could have got out here, and it doesn't look like a lot, but this little price action right here could have made you a lot of money. This could have made you a lot of money right here. I did not take this trade, though. This is not the trade that I took. The trade that I took was right around here. And why is a couple reasons. One, I can see, first off, something that I look for in charts live when I'm looking at them. I look for reversal patterns. I see a trend going up. It can't always go up, right? Eventually, at some point, there's got to be dips. Eventually, it's got to go down at some point. I look for those reversal patterns. I look for something that's going to indicate to me that shit's going to flip. So for me, I use these EMA indicators for that reason. So I see we have a trend, and we're going up and up, and I can see we go down here, and we regain it. We're still using this EMA as support. We're not really touching this 21 EMA yet. But right here, right around lunchtime, this 11:50, if you look down here, you can see 11:50, 11:55, 12. Right around this area here, we go down below the 9 EMA, and we use this 21 EMA as a support level. And we're bouncing around here, though. The range is getting tight. Here, we're bouncing off the 9, and we're going up. We're bouncing, we're going up. Here, we're knifing, and we're using the 21 as a support, and the 9 is almost a resistance now. In fact, it is. We can see here, this orange 21 is a support, and it bounces up to the 9 EMA. But now the 9 EMA is acting as a resistance. Here, we can see it wicks up to the 9, and price closed below the 21 EMA, potentially indicating that a bearish or a downward move is coming. Potentially. Again, nothing is always right. But here would be a decent indication. This is kind of what I saw right here, where I was thinking, okay, I could probably short the market here, and it could be a decent trade. But what am I looking for? Like, what's going on in my head? Like, what's my stop loss? Like, what's my target? Because before you enter a trade, you want to know beforehand where your stop loss is going to be in case the trade goes against you, and where are your price targets. Because once they hit those targets, you want to start scaling out. So in this area here, I noticed that we had already been trending up for a while, for a good couple hours of the day now. It looks like we might be losing some momentum here and potentially could be due for a dip and a downward trend. So right around this area here, I see it's bouncing. The range is getting tight between these EMAs. So what I did, it was right around one of these two candles here. I took a trade. I shorted the market. I bought puts, which I'll explain in another later video. It's an option. I trade options. So a put means I'm short the market, which means I think if the market goes down, I will make money. And I did that because I can see where the range is getting tight. We close below the 21 EMA again here at a decent amount. Like we're pretty extended here. And I notice that the 9 EMA is crossing below the 21 EMA. So when I see that it's crossing below, I use these EMA lines, these indicators, as a momentum indicator about where price could go. So I see the 9 cross below the 21, and then I essentially use this as my next resistance level to try to confirm a downward move is coming. So I see right here, we close below the 21 EMA on this 5-minute candle. The 9-minute is starting to go below the 21 EMA, but that doesn't always mean that it's going to go down. It could always go back up. You never know. So that's why I'm watching this key area here. This key area, this yellow line, I was watching very, very closely. Even on the 1-minute chart, I was watching this. I won't go into that right now because I don't want to get too many candles on here. But this was the level I was watching, and you can see why. You can see this before, that this was a resistance level, hard to get over, struggling. Eventually was a support level, came back up, struggled, support, bounced up, came back down. And what are we seeing now? We're seeing that it is now a resistance level. Anytime you see a support turned resistance, that could be a good indication to go short. So that's what I did here. I saw a 9 and 21 EMA crossover right here, combined with a former resistance turned support turned back into resistance. So I went short the market here. And as we can see, we struggled, and then right here, the 9 EMA is now below the 21 EMA by a little amount, and price is following. I did not trade this whole move all the way down to here. I did not do it. I could have. You never want to try to time the tops and the bottoms of moves because you will be wrong eventually. You want to try to identify a top if you can, or a bottom, and just try to get the meat of the move. That's what I do. I try to scalp in and out. So I got in around this level here, and then I got out it was probably this candle right here. I got out right around there. Because, and I'm going to go in the 3-minute candle on the 3-minute time now, just so we can get a little more detail and a little more candles. We can see I entered the trade, right in this area here. And then I wrote it down, and then I got out right around here. I had noticed that price had gone down. Oops, I don't know what just happened. Let me go back and find this for you, sorry. Webull just kind of glitched on me. So let's go back. So I entered right around this area here. I saw that we came down. We tested this level again. Got rejected back down. and I got out around here. I want to say I got out at this candle, and once I saw that we kind of got green here, I had secured a decent amount of profit, and I just wanted to secure that already. So I got out. Had I listened to my strategy and just, you know, was almost like a robot and didn't care about the money at all and just used this as a pure, from like a pure strategic, standpoint, I could have rode this down. And look, you can see that it's using this 9 EMA as a resistance level now. It comes down, down, down. I could have got all this move down here. I would have made more money, but it's okay. I made a decent amount. I followed my rules, and I got in and out. And you could, at the end of the day, you can never be mad with taking profit. So I could have, rode this down. Price goes back up to here on this big green candle and even comes up above it here, almost goes all the way up to this 21 EMA, but we see we knife back down and we use this 9 EMA as a resistance level. And I could have rode this down. You could ride it up here. You can see there's a little bounce right here. But now look, anytime the 9 is below the 21 EMA, it's a decent indication that there's still more downside. So here, as you can see, even though the price went up above the 9 EMA in this case, and it's using the 21 EMA as a resistance, you can see that, look, price is getting tight in this range. It's getting really tight, maybe indicating that a move either way is coming. In this case, price went down and knifed right through that 9 EMA again until finally there was support, major support right here at this level where price bounced, and at the end of the day, big reversal right here. Big buyer stepped in right here, big reversal, and ended all the way up here. So I think I'm going to end this video here. Just really kind of wanted to go over the 9 and 21 EMA strategy that I kind of use on the 5-minute chart, combined with support and resistance levels. Again, nothing is going to work 100% of the time. This is just kind of something that I've back tested and something that I feel comfortable with trading and something that I feel comfortable doing. Again, it's a lot of screen time. It's a lot of trial and error and just figuring out what works for you. But I just kind of wanted to show you guys an example of what I see and what I look for when I trade and when I scalp, especially. These momentum indicators can really help a lot. But like I said, there is no 100% strategy. But yeah, thank you for watching. Peace out, boys. Let's fucking get it.